Do you know what supplemental health insurance is or what it does? Well, hey, stick around because that's what we're talking about today. How's it going, everybody? I'm Joey Giangola with Giangola Insurance, and supplemental health insurance couldn't have a more descriptive and confusing name if it tried. I bet you kind of feel like you know what you think this might do, but sort of not really. You're not sure if, when, maybe so. But just thinking about the idea of supplemental health insurance after dealing with your primary health insurance, it sounds insane. So let's start with the basics. There's going to be two primary types of supplemental health insurance. One is actually very common and almost expected in most cases, and that's a supplemental policy for your Medicare Parts A and B. That's commonly referred to as a Medicare supplement, and almost everybody has a Medicare supplement to go along with their Medicare. Of course, Medicare is only for people 65 and older, so if you're not in that group, don't worry about it. It is, however, relatively uncommon for you to have a supplemental policy for your regular under 65 health insurance policy. That is until now. So we're going to spend the rest of this video taking a look at those supplemental policies for the under 65 crowd and what and how and why you might actually need them. First question, what does supplemental health insurance cover? Great question. Basically, the goal of any supplemental policy is to plug the holes where an unexpected or unbudgeted financial sum of money could be coming out of your pocket. The two types of policies that commonly exist are accident and critical illness. I'm going to stop right here, put up a big note disclaimer that these types of policies, these supplemental policies, are not considered credible coverage and do not meet the requirements under the Affordable Care Act. Next question, how does supplemental accident insurance work? Great question again. You're really on top of it. There's, again, within the accident policy itself, two different types of policies that you can buy. Those policies are a lump sum or a fixed benefit. First, the lump sum. Basically, what this policy does is it's going to pay you a set dollar amount that you've selected from the options that you have. And they're going to pay you that amount of money up front to help pay for the costs of that accident. In most cases, the dollar amounts can range from anywhere as low as $2,500 to somewhere in the neighborhood of $10,000 and sometimes up. The fixed benefit, however, that's going to be a little more involved, we'll say, where they're going to list out different things, different treatment, different services. And if those are associated with the accident that you incurred, then the policy will pay you a set dollar amount for those particular items. Next question, how does critical illness insurance work? This is going to work a lot like the lump sum accident policy, except the dollar amounts are going to be a lot higher. The policy is going to pay you a set dollar amount, a lump sum, if you are diagnosed with one of the outlined critical illnesses. So if something bad happens, it's a bad disease, it's a bad diagnosis, and it's outlined in that policy, you're going to get a chunk of change just given to you up front. Traditionally, they can range from $10, $20, $30, $40, sometimes even $50,000 a policy. Here's a quick list, an example, if you will, of conditions that you might find outlined to be covered under a critical illness policy. You have heart attack, life-threatening cancer diagnosed more than 90 days after the effective date of the policy, loss of hearing, loss of speech, loss of vision, major transplant, paralysis of the quadriplegia, paraplegia, and hemiplegia, and coma. Moving on, can you buy these for individual people, for families? How does this work? And you can buy these policies for yourself or for your family. In some instances, we'll get to that in a second. But of course, the more people you do add to the plan and the higher the dollar amount you set on these plans, the more money it's going to cost you. So here's a big question that you're probably wanting to know the answer to. How much do supplemental policies cost? It really depends. And I know you hate me for saying that, but honestly, it's going to depend. One, on your age, how old are you? How many people, again, like we just mentioned, do you want to cover on the policy? And again, the overall coverage amount. I'm just going to give you an example for myself. You're probably not the same age as me, but if you are, that's pretty cool and a little bit weird, but I doubt that you are. So if I wanted to buy an accident policy for me and my wife, and we have two young children, the cost, again, depending upon the level that we went with, could be anywhere from $50 to $100 a month. So if I wanted to just take everybody off and just run it for a single person, a single male, 31 years old, I forgot, I guess I probably should say I'm 31, $14 to $30 a month is what that would cost. So now for a critical illness policy, again, children are usually not allowed to be on the policy. For a single person, $9 to $44, again, depending upon what amount of money you've picked for that benefit. If I wanted to add my wife on the policy, it's going to go as high as $17 for that 10 grand or as high as $85 for that $50,000. And the final question of the day, when do these supplemental health insurance policies make the most sense? Probably want to know. So these policies have been around a long time, as long as I've been in the business and well before it. It was hard to recommend them though, because asking you to pay even a few extra dollars beyond the pretty expensive health insurance policy you had was a bit of a stretch. However, since the Affordable Care Act took place, or Obamacare really kicked in 2014, there has been, a change in the way that health insurance policies look, for a sense, and also the cost. So if you do get a subsidy from the government, if they are paying for any portion of your health insurance, in a lot of cases it could be half, if not more, to where there's a decent amount of money left over that you were maybe used to accustomed to paying for your health insurance, maybe not. But there's definitely $10, $15, $20 a month extra to help pay for a supplemental policy that is going to help cover the gap of that probably larger deductible that you're seeing. That's another trend too. A lot of deductibles have gone up, and along with the increasing rates of actual plans, and they've kind of forced you into those higher deductibles because it's the only thing that you can afford. What's the bottom line? Supplemental health insurance is not always going to make sense, but there definitely is a much better chance of it finding a spot in your kind of portfolio, if you will, now to the changes in the law. I just want to make sure that you're going to take the time to do the math and see if one of these or both of these policies might provide some type of favorable financial protection for you if one of those big ticket medical expenses does come up. So now let's go ahead and actually get a little more specific about what these plans do cover, don't cover, and maybe what they might actually cost specifically for you. So to do that, go ahead, click right here on my face, and that'll take you to the next step in this process where we can kind of start to learn a little bit more in depth on this and see exactly how it's going to look for your specific situation. But of course, as always, I do appreciate you for taking the time to watch this video. I do appreciate it greatly. And as always, I am Joey Giangola with Giangola Insurance. Take it easy, everybody. So question, how do you, blah, blah. Moving on to the two common types of policies that exist in this area are one, accidental, and sometimes having to spend a couple thousand, if not $5,000, $6,000 out of your own pocket if you had